AGIX massive breakout is just getting started, and this is a breakout that is playing out after we saw a significant dump in a move that gave us a low below the 0.465, and after getting that significant low, we started to see a very nice recovery, breaking above resistance at the 0.581, flipping that key area of resistance back into support. And the next key area of resistance that AGIX needs to break above lies above the 0.798, and a break above that key area of resistance, then I will have my next target areas above the $1 mark. Another thing that is fueling this massive pump on the AGIX chart is the token merger between AGIX, Fetch AI, and Ocean. And this is a merger that is happening on the 15th of July, which is next month. And as a result of that, that has now brought about a lot of hype into these AI tokens. And in the next coming days, I'm expecting even higher prices and an increase in volatility on these AI tokens. And in today's video, I will be giving you my next target areas on the short term and also on the long term. So make sure that you stick around till the end of the video. So on the short term, I have said to you that as long as we are holding support above the 0.581, I'm expecting higher prices to give us a break above resistance at the 0.798, and a break above that, then we can easily see a straight move to the upside, hitting the dollar mark in the next coming days. We also need to have in mind that there are chances that we don't see that massive push in the next coming hours, and alternatively we see a bit of a pullback after this massive surge. And if that is the case, then using the Fibonacci's, we can get critical areas that we need to continue holding as support by connecting the fibs from these lows that we made on the 18th of June to that high that we have made today, giving me a pullback target area into the golden pocket between the fib level 0.5 and the fib level 0.618, which perfectly lies between the 0.583 and the 0.556, and I can mark that target area here on the charts. So this is an area that we also need to pay attention to in case we see a pullback in the next coming hours. And as long as we continue holding within that area, in case we see that pullback in the next coming hours, then we can expect a bounce back from this area, break above these significant highs, heading straight to the next key area of resistance above the 0.798. So that is the second scenario that we need to have in mind in the next coming hours and also days. Jumping to the daily chart to now give you my long-term price analysis on the AGIX chart and give you reasons why I still believe that we are still in the DCA areas here on the AGIX chart. If I zoom out on the daily chart, you can easily see that after getting our bear market low below the 0.16, we saw that massive surge taking us to that high above the 1.47, and that movement to the upside, we can term it as an Elliot wave count 1 to the upside. So we can term these as an Elliot wave count 1. We can have this as a wave 1, and after seeing that high, we started a pullback in the formation of a second wave, which is a corrective wave. And once we have a low in place in this wave 2, I will be expecting higher prices in the formation of that wave 3, then expect a wave 4, and then top out in that Elliott wave structure in the bull market in a wave 5. And the minimum target areas for the second wave can be given using the Fibonacci's, connecting the fibs from the lows that we made on the 16th of August to that 1.47 high, giving me a minimum pullback target area for the second wave between the fib level 0.5 and the fib level 0.78, which perfectly lies between the 0.819 and the 0.44, which is a critical area that we need to continue paying attention to. And as long as we are holding within this area, expect a massive bounce in the start of an impulsive wave in the formation of this wave 3. But if by any chance we continue heading further down and maybe at some point we lose the fib level 0.618 and break out of this blue target area to the lower side, then the last line of hope lies on the fib level 0.88, which perfectly lies above the 0.316. And if by any chance we lose this key area of support on the Fibonacci's, I will be expecting a total reset of the lows that we made in the bear market, where I will be expecting AGIX to give us new lows, that is new bear market lows, or maybe give us a reset of the lows that we made below the 0.157. So those are the possible scenarios that I'm expecting here on the AGIX chart for the next coming hours and also days. And I hope that video was of much help to you, and I hope to catch you on the next one.